Hello and welcome. You're watching Closing Trades on ET now. I'm Anisha Jain, and for now the market is in a bit of a sideways move for now. So Nifty is in the red, so we have given up that mark of 25,000. Having said that, the Bank Nifty is outperforming today with that gain of almost 200 points, and the mid caps and the small cap indices too have managed to move into the green. In fact, it's a very swift recovery that we have seen. Let's pull up the intraday charts now of mid cap and small cap, because that will tell you that from the lows of the trading session on those two indices, we have managed to come up. Okay, no, they're still in the red right now with a cut of almost 1.25%. So the initial rates that we had seen were probably not correct, because if you look at the line charts, they are telling you that it is the broader markets which continue to reel under pressure, and the Nifty too is of the highest point of the trading session. Right now we are staring at a level which is sideways just around that 25,000 mark on the Nifty. In fact, even Bank Nifty is also down 50 points as we speak. Overall, in terms of the internals of the markets right now, we have the gainers coming in on the likes of Adani Transmission. Jubilant Life is actually doing quite well, so that stock is up 12%. First Source has had a very good run, so we have seen that stock rise up by almost 9%. In fact, other RPSG group companies, the likes of Philip Carbon, CSC, they're also doing quite well. Let's take it across to Sandeep Sabharwal, who's joining us on the show. Sandeep, I'm not sure if you have been tracking the RPSG group that closely or not, but companies like CSC, Philips Carbon, First Source, they've come back on the investor radar quite sharply.
Yeah, so Philips Carbon has been doing well along with, I think, the RBC group company. So one of the companies we hold, KEC International, that's been doing well over the years, and it continues to do well. Ex of that, they have, I think, C8 is in the group and other companies. So I think most of the companies of the group have been doing well in general. Now, stock-wise, depending on valuation and company cycles, the stocks move, but in general, the group has been doing decently.
Wonder what you've made of the reports doing rounds, Sandeep, that KC could perhaps be one of the candidates to take over ITD. Now, given the fact you track that closely, would you have a view if it does transpire?
In most of the acquisitions, my view always is that it depends on the valuations at which an acquisition happens, because KEC has a strong presence in the civil works side. So if they take over ITD cementation, depending on the valuation, it could be a fit. But then it's purely on valuation, so we cannot generalize and say that it will be good or bad.
We'll see how it really pans out. But Kunal Bothra is also with us in the studios. Kunal, what do you make of the market mood right now? We did manage to hit that mark of 25,000 finally, but did not sustain at that level. And especially the broader markets, they are giving up quite materially.
Well, yeah, I think we've seen yet again another similar behavior, I would say, for the markets. We had the same tendency for the index when we had managed to break past about the 24,000 mark and then 23,000 mark earlier also, that the market goes into a breakout of those strong psychological levels, retraces back for a couple of days, and then tries to just about stabilize at those round figure numbers. So I would probably believe that we are into a similar phase for the index yet again. No major damage in terms of the larger cap names is what we can see on the screen so far, because not too many large cap stocks are showing any major kind of a reversal. The ones which were which had rallied up higher on an intraday basis, they are the ones which have retraced. You look at the premium for the indices, that's dropped down a bit, which could probably be an indication that maybe some sort of profit booking has come back into the individual stocks or maybe individual index positions, but no major change in terms of the open interest data so far, which could probably give us a signal of a major reversal. So as of now, expecting the indices to just about consolidate at the 25,000 mark.
Okay, consolidation at 25,000 mark thereabouts. But Sandeep, what's the view on autos as a basket? I mean, we are going through the July data so far. It doesn't look very impressive, though the earnings from the companies, the likes of Maruti, etc., were quite strong. Even M&M surprised on the margin front. And we had the management this morning talking about how things are looking up, even on the rural side of things. Would you buy afresh when it comes to the auto sector? And if yes, what segment, which stocks?
So auto sector results in general have been good. So Maruti numbers were good, M&M was good, Bajaj Auto numbers were good. So I think overall the sector is doing well. They have tailwinds in terms of input cost pressures not being there and value additive products getting sold. So value growth is more than volume growth, and that's adding to the profitability of these companies. Now, for this month or a month or two, I think there could be inventory adjustments where wholesale dispatches might be lesser than retail sales because there have been talks of some sort of 3-4 days extra of inventory built up in the system. So I think that might get adjusted. So based on these news flows, if we see the stocks correct somewhat, I think it's a good sector to be in.
It's a good sector to be in. Have you looked at the Ola IPO closely? Would you be a buyer or a subscriber to that? It opens for public tomorrow.
The IPOs, we know they get subscribed, they get listed at a premium, but purely as a fundamental analyst, I don't see any value in the stock because I don't think they'll be able to make profits. The competition from the old incumbent players is growing substantially. They have much better cash flows and ability to withstand losses of the EV electric vehicles as the growth happens. So, and Ola will continuously lose market share in my view over the next few months and quarters. So, I think investors who will be betting on this will be betting on one profitability coming, which is tough, or them being able to retain their market share, which is also going to be tough.
Post the earnings season, Sandeep, has your view changed for a few sectors? Have there been some fresh bets that have come on your radar or something that you have booked the losses or profits out of? Any recent moves?
So in general, we have exited a lot of the railway plays because we thought that they had run up a lot. So stocks like Titagar or Texmaco Rail or some other PSU related railway stocks, we have either exited or trimmed holdings because I see limited valuation comfort in those. Other than that, in terms of fresh purchases, I would wait and watch and see the markets a bit, wait for the markets to correct a bit before buying.
Watch, that's the view coming in on the markets right now. Quick look at some of the losers as well. Sonata Software is down 8.5%, Birla Soft is down 5%, and these are some of the result reactions which are still reacting second, third day on the trot. Z Entertainment, wherein the commentary was strong, is actually seeing a profit booking and down about 4% in the trading session right now. And even some other companies like NCC, ACC, they're all in the red. In fact, Kunal, what's your view on Z Entertainment as a stock? Would you recommend buying at these levels? And what about Birla Soft, Sonata Software, or any of those smaller IT companies?
Well, Z Entertainment would not suggest a buy. In fact, this is a stock which has been struggling, significantly below its, major moving averages. To 25 to 30 was the level the stock had broken in December 2023, and from there on, the stock had been going through a corrective phase. It's corrected more than 40-50% as well from those 220 plus kind of levels. So, which means that the stock is still going through a corrective phase, and the correction still seems to be at large continuing for Z Entertainment. So, would not suggest a buy even at current levels, even though there are phases where the stocks may get into a 5%, 10% kind of a rally because the overall trend is still negative. On the other hand, I think stocks like Birla Soft, I was looking at the charts over the very short term, the stock has fallen below its critical moving averages, and the last couple of days we've seen that the stock has the sell-off is intensified for the stock from 730 odd levels, 715 odd levels. The stock has now fallen back towards 650 mark. It's broken below the 200 and the 50-day moving average, which means that there is near-term weakness which has emerged into the stock price. So, would not look at buying the stock at current levels unless it comes back about the 680 to 700 mark.
One space which has been doing fairly well, Sandeep, is the power and the power utilities at that. Of course, Power Grid NTPC held their analyst meets. They've upped their capex guidance. They're talking about a 7 trillion rupee investment till FY 2030, FY 32. There was earnings that came in from Torrent Power, from the private utility space, and that was very stunning as well. Fresh buys into power, or just book profits or stay away?
I think this is again another sector where the tailwinds obviously have played out in terms of near-term power shortages helping the merchant players as well as huge additions on the renewable side. However, I think the valuations are running ahead, and if you look at the ROE of most of these companies, these are in single digits. So such low ROE companies commanding 40, 50 PE or even higher is excessive in my view.
The view coming in on some of these power companies, but finding growth at a good value, that's the kind of conundrum that a lot of investors are facing right now. Sandeep, thanks so much for joining us today. What we'll do is take a quick break right now. On the other side, the management of Dabur will join us to talk to us about their earnings. The volume growth came in at around 5%. We'll dissect the numbers and the way forward after this very short break. Welcome back. Dabur just reported its numbers and it was a good set. So let's decode that with Mr. Ankush Jain, the CFO at Dabur India, joining us. Ankush, hi. Good to be speaking with you. Well, it's after a couple of years that we have finally seen the volume figure of 5% because the last time it happened, it was in Q1 FY23. But now can we probably say that this is going to be a sustainable rate?
Yeah, hi. Good afternoon to you and all your viewers. First of all, before I go directly to volume, bit of a context. Our top line increased by 7%, as you know. Our operating margin by 8.3%, and this was, as you rightly said, backed up by almost 5.2% of India volume increase. And this, has been almost, even last quarter. So sequentially, we have been seeing an increase in volume uptick since last 2-3 quarters. And we believe now that with the rural economy, showing some signs of gradual improvement and outpacing the urban demand as well, which augurs well for us. And therefore, we think this should be sustainable. And, it should even become slightly better even in H2. So we are positive and optimistic, based on the rural, expansion which we are seeing currently.
The way things stand right now, would it be too hopeful or would it be realistic to expect that exit rate for FY25 could be perhaps double-digit volume growth?
I won't be able to comment on the full year numbers at this point of time, but we can say that at least, mid to high single digit we are aspiring for, and that looks achievable because we are seeing traction, especially in rural, economy, as I said earlier. So even we saw, the rural economy grew almost 250 bits higher than urban, and even last quarter it was 100 bits higher. So sequentially it is better. Even for us, we are higher, and therefore we think that double digit. I'm not sure if I can comment or, but mid to high single digit. That's what our aspiration is.
Take that mid to high single digit aspiration, but the fact that you talked about that rural growth has outpaced the urban demand by as much as 350 basis points. Going forward, do you see an expansion of this number that the rural will continue to outpace and by a bigger margin? Or do you anticipate that urban might also catch up? What's the way forward with respect to the rural versus urban divide and spend scenario?
For H2 especially, when the government has rolled out so many incentives and also increased its allocation to rural development plus infrastructure and cap, so there will be some lag impact as well, and obviously with the multiplier impact. So that should go better for rural than urban, at least for H2, we think. And the gap, which is 350, can marginally improve from here on. By the end of the year.
Something which is positive, augurs well for the entire country. But the margin performance too is quite commendable, 19.5%. And in the quarter gone by, you had laid out how 20% is the long-term target. Now, given the fact that you've already achieved close to that, are you looking at perhaps upping the target? Are you now looking at targeting 21, 22? What's the way forward on the margin front, given the operating leverage will also kick in?
Correct. So in terms of operating margin, while we mentioned that we will be marginally increasing our operating margin this year by 25 to 30 bips or thereabouts, but it also depends on the gross margin expansion. We think that the gross margin expansion will increase at least in Q1 and part in H2 as well. But as a strategy, we would want to redeploy significant part of it back into advertisement to generate demand, and to develop more categories. You also know that we are entering newer and newer categories, newer and newer variants, increasing our addressable market. So that also needs a bit of investment. Secondly, we also are investing ahead of the curve in terms of our sales team infrastructure, getting into more and more villages, getting more and more stockists, and also, infrastructure and IT developments. So a part of this will be redeployed for building future capabilities and developing newer products and sales infrastructure.
So you're investing for growth as well, but talking about investing because to fuel growth, are you able to increase your market share? Because I was just going through the toothpaste segment, you've managed to deliver a growth of 12% in that. In fact, other peers of yours, the likes of Colgate, etc., also talked about a double-digit growth. Wanted to understand what kind of growth rate should we expect in this segment, and have you managed to gain market share there?
Yeah. So first of all, specific on toothpaste, while almost every player has grown by 10 to 12%, and likewise but we have actually gained market share in red toothpaste, which is our power brand or a main brand for the company, and we continue to gain market shares. Even we have gained 90%, in 90% of our product portfolio combination, we have gained market share, which means that our strategy of driving awareness and availability and increasing expansion is working pretty fine. Now, going forward, our aspiration is always to grow ahead of the category and, thereby increase our market share positions, either strengthen them wherever we are market leaders, for example, Chyawanprash, honey, juices, mosquito repellents, and also wherever we are either challengers or number 2 or number 3 players, increase our market share anyways to bridge the gap. So focus is very clear, increase in market share and grow ahead of the category.
Ankush, what's been the impact as far as the spices category is concerned? Because the last few months haven't been very kind with respect to the headlines that we have been getting for the spices segment, both in terms of the international exports as well as the domestic consumption. How have things moved there, and have you seen a bit of a drop perhaps in demand, international or domestic?
Yeah, in fact, the spices category we entered only last year, so we are not a very significant player, but having said that, it augurs well for us because we have seen our increase in market share. Our growth has been in high teens, and this is, by the fact that we are also synergizing it with Dabur ecosystem. So there is a lot of headroom for us to grow. While there may be some bit of pressure at the category level, but I think we have a lot of headroom, as I said, because we are operating in only 2 geographies. We can expand it to other neighboring geographies like Central India, North India, part of South India as well. So for us, I think it's only a growth engine for us as of now.
Ankush, before I let you go, because the numbers for Adani Enterprises are also coming in, just the last question as far as the price hikes are concerned, because you did allude to the fact that there is a room on the upside for gross margins, even though you're looking at deploying it back. This expansion in gross margins will come in from price hikes, or is it the fact that the raw material prices have stabilized a bit?
Yeah, so I think in H1, we have seen a bit of deflation, and that is aiding the price, that is aiding the gross margin expansion. Plus, there are some rollover of price increases, which we would have taken in last 1 year or so. Even in Q2, we expect some bit of deflation and, rollover of price increases. So gross margins at least should expand. However, the initial indications are that with WPI and CPI increasing, the inflationary pressure or the deflationary situation may ease, and it may actually lead to a bit of inflation, especially from H2. But then, as an organization, we do a lot of value optimization, a lot of value engineering, a lot of process efficiencies, etc. So that should aid in bridging the gap and helping us at least maintain or grow the margins, if at all, yeah.
Ankush, on that note, we'll let you go. Appreciate you making time and speaking with us. So that's the management of Dabur, quite hopeful about the rural recovery in the second half of the year and expecting at least mid to high single-digit volume growth with a possibility of expansion in terms of gross margin, even though they're looking at gaining the market share and redeploying it for growth as well. Numbers for Adani Enterprises at the bottom of the screen. It looks like an impressive set with the EBITDA jumping by over 40% right now, and the stock is reacting positively as well. Time for a short break. When we come back, we'll get Vinay Rajani on board to talk to us about the technicals as well. Welcome back. Well, a lot of action when it comes to the primary market. So let's put the spotlight on Unicommerce eSolutions. It's of course a company that provides, it's a SaaS company which provides logistical solutions to the clients as well. We have Kunal Bell, the promoter and non-executive director, and Kapil Makhija, the MD and CEO of Unicommerce Solutions, joining us on the show right now. Hi, gentlemen. Good afternoon and congratulations on hitting the Dalal Street. I just wanted to begin by asking you, Kunal, it's a complete OFS. Could you help us understand why the investors are looking for an exit at this point of time? Because clearly the money is not coming into the company. So what was the reason and rationale of doing an OFS at this point of time?
Well, thank you for having us here. Look, Unicommerce is a profit-making company. It's been profitable for many years, and we generate free cash flow. We also have a substantial amount of cash on the balance sheet. And given the company continues to generate free cash flow and has cash on the balance sheet, at this point in time, we wanted to meet the statutory minimum of 25%, because of which two of our shareholders are selling their shares. And if we have to raise primary capital in the future, we would consider that at the appropriate time.
Okay, could you also talk to us about some of your clients, because which have been your latest additions, any more in the pipeline? Because if we do have it right, some of your client retention ratios, like the small and medium business client retention ratio, has been falling.
We have two key types of customers. We have enterprise customers and we have SMB customers, small, medium enterprises. The enterprise customers account for 90% of our revenues, and the client base of enterprises has been growing every year. Enterprises by design are slightly more established businesses, more stable businesses, and they usually don't go out of business as much, which is not the case in the SMB segment. In the SMB segment, many times these are homepreneurs, these are small businesses that just started selling online, and in 3 months or 6 months realized that they either ran out of capital or they changed their mind about the business. And so they would obviously maybe be shutting down their business. We obviously can't control these reasons for why these clients leave us, because usually they are no longer in business. That said, that is in revenue terms, just about around 10% of our business. And many of these SMBs actually historically have grown large enough also where they have become enterprise customers thereafter. So we see the SMB part of our business essentially as a funnel into the enterprise part of our business, which is actually 90% of our revenue.
Right. Good afternoon, gentlemen. This is Shailu also joining in the conversation. And Kapil, let me come to you. The EBITDA margins have actually improved to almost 14% versus 8% that was about 2 years ago. So do you see any more levers for the expansion here? What's your outlook coming in for EBITDA margin?
Yeah, so this is a business where we see high gross margin, as well as we see a very strong operating leverage in the business, where as our revenues continue to grow, and the various levers for our revenue growth are increasing transactions of our customers, as well as addition of new customers, plus addition of new products that we are selling to or cross-selling to some of our existing customers, and addition of geographies. But as our revenue continues to increase, our costs do not increase in similar proportion, and that's why we see strong operating leverage in the business, where a significant portion of our revenue growth can continue to go to our bottom line. And we have historically demonstrated where our PAT grew almost double from FY23 to FY24. So there is a significant operating leverage in the business, and we have historically demonstrated not only consistent revenue growth, but expanding profitability. And this is a business which continues to generate cash on a regular basis as well.
Right, your company had like a negative cash flows from operating, investing and financing activities in the past actually. When do you see some sort of a turnaround creeping over there?
So we have seen a considerable improvement in terms of our DSOs, days of outstanding. So this is a business where the platform is very, very sticky. We have long-standing relationships with our customers, and it becomes a lifeline for their business. Our DSOs, which used to range at about 55 odd days, are now at about 45 days for us. So we have seen a very healthy improvement, and as I mentioned, we continue to generate free cash flow in the business and have seen expanding profitability. That's a result of a very sticky relationship that we have with our customers, and more importantly, a very, very stable platform which becomes a lifeline for their e-commerce business.
And to add to that, historically, we've not seen a situation of having any material bad debts either. So that way the business is, because we are in effect the operating system for these brands, so they would want to continue to keep it on, for which they would need to continue to pay the bills.
Okay, so that's the view coming in as far as the overall profile is concerned, even on the margin fronts, etc. But what about revenue? Do you expect the growth rate to continue at the current level or accelerate from here on?
Our goal is to continue to be ahead of e-commerce growth rates in the country. So when the e-commerce market was growing at 30% 2-3 years ago, we were growing at 50%, in near about 50% in annual revenue growth. Last year was a very slow year for e-commerce growth. I think it's well demonstrated by the relatively sluggish growth in e-commerce shipment volume, as well as the growth in revenues of some of the listed companies or soon to list companies in the e-commerce marketplace space. That said, we grew ahead of the market at 15% of revenue, and during that time, as Kapil mentioned, we saw our operating leverage really kick in, where despite the 15% growth in revenue ahead of the e-commerce market growth, we doubled our PAT. So going forward, our goal will be to continue to deliver e-commerce market plus growth, and obviously a faster growth in profits.
All right then, gentlemen, thank you so much for joining us on ET Now to talk about the IPO, the way forward going for the business. All the best actually for the IPO, and look forward to connecting with you soon. But let's move on and let's connect with Jonathan Shizzles, who's joining us on the show right now along with Vijay Rajani. Very good afternoon to you, gentlemen. And Jonathan, let me come to you and let's talk about this, the construct of the market right now. Where do you see the favor tilted when you talk about the sectors? Do you think that banking, like everyone has been saying, will make a comeback, and that comeback will be fierce going ahead?
Yes, good afternoon. Yeah, I'd agree with you. I think, banking remains, and the whole financial sector remains a key one for India and many other markets for that matter. And yeah, look, there's some great stocks in the index, and that some of them have done better than others. But of course, the great thing about financials and banking is it's a great way to play the broader economy, because obviously banks are involved in so many different sectors. So it's a great way to play, particularly if for example, for foreign investors who might not be able to own so many stocks, it's a good way to play the broader economy with financials. And obviously, we still are doing that here.
We'll get the numbers for Zomato flashing for you on the screen as well, because overall the expectation was that there's going to be a bit of a recovery, and the profitability has come ahead of estimates at 250 crore. We were working with a number of around 230 crore. So that's the first tick that you are seeing on that stock price right now. Moving on the positive side, we'll try and get you more details in terms of the internals, but let me quickly take it across to Vinay to get a sense as to what the technicals of that chart is suggesting. Vinay, would you recommend a fresh buy on Zomato at the current levels?
So Zomato is into clear-cut uptrend. It is trading at its all-time high. So there is no confirmation of trend reversal. So it is into a continuation, I must say. The previous swing high was placed at 232. So today it has crossed that level. So obviously it is looking good on the chart. And the short-term support I can see over here is around 224. So keeping that stop loss in mind, our traders can continue to hold on to their long positions. So this is the short-term strategy, keeping a stop loss at 224, and it should be kept as a trailing basis, so that we can ride the rally in the uptrend. So 224 should be the stop loss, and one should continue to hold.
All right, some more numbers coming in for Zomato, where you have the revenue that's come in higher by about 18% on a quarter-on-quarter basis, coming at around 4,206 crore rupees. Let's see what's the number that we were expecting for Zomato's revenue, because we are expecting the revenues to come in at around 3,986. The number is about 4,206 crore rupees. That's your revenue coming in for Zomato, where the profit is coming at around 253 crores versus 235 crore rupees. But all of them will be actually keenly awaiting for that cryptic post coming in from Dipinder, isn't it?
Yeah, what do they mean by this trick? What are they doing about it? I think that is what interests not only the investors, the consumers as well. But for now, the investors are interested in the fact that the stock is actually inching higher. It's a sizable beat which we have seen on the top line of the company, 4,000 plus crores versus expectation of sub 4,000. And that's trickling down with respect to the profitability as well, because 250 crore is better than what the street was expecting. We're also waiting to get that shareholder letter that they usually send out, because that talks about how Blinkit has done, what the GOV has been, the gross order value, when do they expect the EBITDA break-even, etc. to happen, and all of those internals would be keenly watched out for as well. But that stock, with the initial details that we have on the revenue as well as the profitability, looks like a beat, and even on the EBITDA front, it's pretty much sideways, to be honest. There seems to be a slight bit of miss as far as the EBITDA margin profile is concerned, but I think the fact that the top line was stronger would, as it is, has made the profitability look like a beat, even if on the margin front there is a bit of a sideways move. But Vinay, your quick word as far as the market mood is concerned, because 25,000 we managed to hit that mark, but correct from there. Broader markets are coming under pressure. Is there some sort of selling pressure or booking profits that you are seeing?
Yeah, so basically, breadth was the only strongest part of the market. But today, despite Nifty is trading with the gain of 60 points and just 60, 70 points away from its all-time high, which was hit today. But looking at the micro cap, small cap, and mid cap indices, it looks like a breadth has turned weak, and it looks like more of a profit booking phase for the mid cap and small cap. So I think this is the time to turn cautious, because when uncertainties was there, breadth was holding very strong. But today is a day when Nifty and Bank Nifty is not falling, but breadth has turned negative. So I think this is the time to get cautious, looking at just at the breadth and the small cap mid cap chart. So I'm a bit cautious right now. One should stay away from the aggressive long, especially in the mid cap and small cap segment. The way it closes, it looks like that in the coming days, further extension of the fall could be there in the mid cap and small cap.
Coming to you, let's talk about what's exactly happening in these new age tech counters, and which one are you liking at this point in time? Because given the fact that you have Zomato numbers, they've definitely beaten the street when it comes to the profit, the revenue coming in. Also, the margin, no doubt, is sideways, like the way Anisha mentioned. They missed on the EBITDA margin front. But what's your take coming in on the entire new age tech stock companies? You think it's a space that one should be in, repose their faith in?
Yeah, is it for me?
Jonathan, is for you. Sorry.
Oh, sorry. Yeah, look, I think it's the great thing about the Indian market is there are a lot of IPOs that have come to the market, and yeah, it looks there's a lot of choice and different companies you can look at. So I think it is definitely a very interesting space, and one that investors should have some exposure to. I guess the only issue is these companies. At the early stage, it's a very competitive space. There's a lot of new entrants into the space. So trying to find those companies which are already have a fairly dominant position and look like they can carry on growing without losing too much market share to new entrants. That's the trick. And India does have a few of those at the moment. And yeah, it's definitely a space investors should have exposure to.
Jonathan, which are the sectors or themes that you have increased your exposure to, and where have you cut it? Because I'm just trying to understand as to how you're looking at churning your portfolio right now. Financials, have you thrown in the towel? Have you lost patience with that, or you're sticking with your assessment there on the large private banks?
Yeah, I mean, we tend not to trade too much, so we're more medium to long-term holders. Obviously, we try not to get too concerned about short-term market movements. So we take more structural positions, and we haven't really made any significant changes for some time. But I would sort of reiterate the previous comment about some of the smaller cap and mid cap sectors, which are looking a little bit extended, and obviously, a bit overextended from a retail participation perspective. But from a large cap perspective, yeah, we continue to like the financials, some of the capital goods companies, and some of the consumer facing companies. But yeah, not much change from us really. We're sort of long term holders, and we're looking for good quality companies that are delivering compounding growth. So yeah, just not much change from us.
Coming to you, let's talk about the auto space. We have the auto sales numbers trickling in, not that great coming in for Tata Motors. You also had M&M and Maruti that reacted to the numbers today. They are reacting to brokerage comments as well as the auto sales numbers. But what's your outlook coming in for the auto sector, given the fact that now you also will have a new entrant coming in the two-wheeler space?
Well, yeah, I think the sector has been doing pretty well. In fact, in the last 1 or 2 weeks, this was one of the key sectors which managed to come back from an underperforming zone to a covering up of the underperformance. Many of the stocks made a very strong comeback. Tata Motors was one of the strongest one, which made a comeback for itself. Then led by the likes of Maruti, which also came back towards 13,500 plus levels. Ashok Leyland was also one of the top performers in the last 1 week. But I believe that what we're also seeing is more of a patch of consolidation from most of the other stocks, the likes of TVS Motors, Bajaj Auto, Hero MotoCorp. But I would probably believe that that's a healthy sign that if you have many of the stocks which were erstwhile performers, if they are going through a time-wise consolidation, and then you have new performers which are leading the charge from the front. So I would probably believe that that's a strong indication of a sector churn, and also an indication that the trend is intact. So maintain the bullish stance on auto names as such. Tata Motors is one of the strongest pick from the auto pack so far. Eicher Motors is something which I'll be bullish on from current levels.
Okay, so you're bullish on autos, but Vinay, are you bullish on the power sector? Because Power Grid NTPC have been doing quite well since their analyst meet, where they had upped their guidance with respect to the capex as well. Torrent Power came out with a very strong set of numbers. Tata Power is reacting today as well. Coal India from the ancillary world is also active today with that 3% gain. What's the top recommendation within power, which could be perhaps a fresh buy, and where would you recommend taking profit off the table within the sector?
So from the power space, I like Tata Power. So today, for last 3-4 session, it has been rising. But today, if we were to look at the chart, weekly chart, it is a clear-cut breakout from the last 10 to 15 weeks. It was consolidating, and now it is on the verge of breaking out from that consolidation. So Tata Power is the stock which I like, which is trading around 464. If you are a trader, then you can keep a stop loss at 450 odd levels for the short term. But on the upside, I'm expecting Tata Power to move beyond 490 in the coming days. So Tata Power is a stock which I like, and today is a fresh breakout and momentum can be seen. So one can go for the Tata Power if somebody wants to pick a long call in the power space.
Okay, time now to take the BTSC trades from our technical experts as well. Vinay, why don't you go first itself? What's the buy today, sell tomorrow idea? It's the day of the expiry. Are you willing to carry some bets?
Yeah, sure. So I have one long call and one short call. So Adani Port is looking good to me and looking like it has found momentum, and entire Adani Group stocks have shown some traction today. So I think Adani Ports trader can initiate long around 1585. Stop loss can be kept at 1565. On the higher side, 1620 should be the target. And another call I'm going for the short side, which is L&T Finance and Holding. In August future, one can go short. So I'm recommending selling L&T Finance Holding. So LTF August future can be sold at 178. Stop loss can be kept at 182. And on the downside, I'm expecting a target of 172. So these are the two calls, one long and one short.
So those are the BTST ideas coming in from Vinay. But Kunal, coming to you, what are your BTST ideas?
So I'll go with one by one. The first one is by Shriram Finance. That's a chart which is looking very attractive. Confirming a breakout, even in this kind of a market where the second half has been a lot more profit booking for many stocks. So we recommend a buy with a target of 3,075. Stop loss could now be trailed higher to 29.20 for Shriram Finance. Since the stock has moved up higher in the last 5-10 minutes or so. Ambuja Cement is the stock which is broken below a critical support level for itself today, breaking past about the 50 DMA. So would suggest a sell with a target of 642. Stop loss could be kept at 675.
All right, So those are the BTST ideas from our experts. But let's head across to Sharad to understand what's the chatter in the dealing room then, Sharad.
Focus is Blue Jet Healthcare, and what we are gathering from dealers is that HNI buying is coming across certain counters, and it's likely that a marquee investor might be adding positions in the company. Now, interestingly, the volumes have added almost 3 times its 20-day average, and the investors already included in the company include the names such as ValueQuest as well as Norges Bank. Interestingly, the Q1 results are expected to come on August 7, and Street is expecting the numbers would be on the stronger side. And recently, the company commissioned its multi-product production block for manufacturing pharma intermediaries, and also they commenced the manufacturing of their validation batches in the pharma segment.
Okay, point taken. So that's a view coming in as far as some of these, chatter is concerned in the dealing room. But one of the top losers from the index today is also M&M. Now that continues to reel under pressure despite reporting a decent set of numbers. In fact, the management was quite categorical that they are maintaining their guidance of a 5% growth or as far as the tractor business is concerned for the industry as well. But the stock continues to reel under pressure because they also alluded to the fact that none of the consumers want a too long a waiting period right now, and they're willing to make those bets of trimming the prices or giving discounts where needed in order to fuel growth. Hear out a slice of that conversation.
Tractor market has gone through a difficult last year. -7 was the industry for last year. Q1 was -1. We had a growth of 5% because we gained market share. We're seeing some very positive green shoots. So just quickly to recap on that, the rains have been very good in most parts of the country except 2 or 3 states towards the east and some part of north, but west and south, which was really bad last year, has been very good. The terms of trade, which is the price that the farmer is able to realize compared to the input cost, has kept getting better. We also have something we call the rural spend index, and we've seen that correlate very well with tractor sales in the past. And there's a mean point above which when it goes, we start seeing tractor sales come up. This is a combination of what state government spends and central government spends on rural and agriculture. We've seen that move up too. So a combination of these makes us believe that there will be a recovery in the second half. At this point, we're not changing our full year forecast, which was at 5%. But we'll look at that in the next 2 to 3 months. But clearly there is a rural recovery that we're seeing. We had good growth in SUVs. We had said this year will be mid to high teens, and right now Q1 was 24% growth. SUVs today is now more than 60% of the passenger vehicle market, so it's mainstream. We do expect SUV even for the industry to grow faster than the passenger vehicle industry, which is the rest of the market. So maybe, it'll be single-digit growth is our sense for the industry for SUVs, lower than that for the passenger vehicles for the year. This was also the forecast that SIAM had put out earlier for the year. And because we have a couple of new launches and, the differentiation of our brand, we are hoping to grow mid to high teens. So we hope to continue gaining market share. SUV as an industry will grow faster than passenger vehicles. And at a slower rate than earlier because of the base effect, as you said. By 2027, we would like 20 to 30% of our SUVs to be EV. And we've created some really wow products, and you may have seen visuals of that, but you would start seeing them on the road in 2025.
All right. The management of M&M talking about their earnings, but the street is definitely not enthused with the auto sales numbers that actually came out for Mahindra Mahindra, where the auto segment sales missed ET now estimates. A lot of earnings pouring in. Actually, Welspun Enterprises, the stock is trading higher by about 3% post their earnings. If you look at the numbers, 18% uptick coming in the profit, the EBITDA margin also, EBITDA levels also a good significant uptick coming in on a year-on-year basis. You also have Newland Labs as just reporting its numbers, and like I said, Anisha, is just raining numbers, no more trickling in.
Yeah, they're not trickling in. It's coming in thick and fast. And let's pull up the actually intraday chart of Newland Laboratories because it looks like it's a strong set of numbers. 98 crores is what the profitability is indicating versus 62 crore last year. So there's a spike up on that one. In fact, 7% higher as we speak for Newland Labs. Separately, Jubilant Life has been doing quite well. You also have Capri Global in focus. We talked about Aster DM Health as well. Nuvama Wealth is one other name which is in focus, and Oil India too is holding out okay. In fact, there are a lot of earnings which are lined up as well. We got the numbers of Zomato, but ITC is the other one to watch out for. Let me take it across to Winnie to get a better understanding of what the expectations are from the street, because the cigarette volume is something which is really important to track. The demerger is something which is on track, and that's what we have been talking about. The management was categorical that in terms of the hotels business demerger, it is on track. But what kind of volumes do they get on the cigarette business? What kind of numbers come out of the hotel business is something which is important. What are the key numbers though? Let me take it across to Winnie now.
So yes, in terms of numbers from ITC this time around, we are expecting a 6% growth in terms of overall the total revenue. What will be supporting the growth this time will be a steady performance that is again coming in from the hotel business as well as the FMCG business. That is going to be doing well. But paperboard business, like in the last few quarters we have seen, that is expected to be under pressure even this time. Profitability of the company, 5% growth in terms of the profits. EBITDA margin 37.9% versus 37.6%. So 30 basis point expansion in terms of the overall EBITDA margins of the company. Cigarette volumes, that's expected to come in at somewhere around 3%, and for the cigarette business, we're expecting an EBIT margin, expecting to see a bit of a contraction this time due to the raw material price inflation. Now, FMCG business, that's expected to see a growth of around 6 to 7%, with an EBIT margin of around 9% is what one could expect from the FMCG business. And paperboard business, that pressure is continuing because of the weak export trends that is there, as well as the impact in terms of the demands. So that could be under pressure. Agri business, that's expected to start seeing a recovery and start seeing a bit of a positive sign this time. So yes, watching out for all of that. With the cigarette volume growth, what is the FMCG outlook, growth trends over there, and especially the margins, anything in terms of pricing strategy, as well as paperboard demand trends, and when could we start seeing that positive recovery is something we are watching out for.
ITC, that's the number to watch out for. But let's head across to Prakash, who has an exclusive story right now with regards to the coal ministry. Prakash, what are you picking up? You've told us that coal ministry is finalizing the cabinet note to set up a coal trading exchange.
Yes, it's a very significant development coming in, as we are learning from our sources that the coal ministry has finalized the cabinet note for setting up a first coal trading exchange in the country. A very significant development coming in, as it is being considered as one of the mega reforms in the coal sector, where the government is planning to open up the coal market through an online trading platform. The coal ministry has already completed the interministerial consultation on the draft cabinet note, and now the final proposal has been prepared, and it has sought approval from the Union Cabinet to set up first coal trading exchange in the country. Along with that, we are also learning that the government is planning to set up first coal trading exchange by end of this year, which will provide an option to the buyers and sellers beyond term linkages. Along with that, it will also ensure easy availability of coal in the market. CIL may be allowed to sell its surplus coal through exchanges after meeting long-term linkage commitments. So it's a very significant development, and the government is also expecting better price discovery with the market-based mechanism. Back to you.
Very structural change if it does come by. I do wonder what will happen to the e-auction mechanism if it does goes through, because this will be good news for the users of coal. So your power companies, the cement companies, a lot of these metal companies for which coal is a raw material, and at times they suffer because of the supply constraints, they will stand to benefit. And of course, if the coal trading exchange does come in the books of Coal India, that would itself mean that there would be additional income. So we'll have to understand the modalities a bit better, whether this is something which is outside the purview of Coal India, whether this is a separate body being formed, how will the mechanism come through? Because while the trading exchanges on power, that is IEX, the power exchange, etc., have done really well, the gas exchanges have done really well, probably the step in the right direction, but we'll have to wait by and see how it really pans out. A quick word then, Vinay, as far as the overall FMCG sector is concerned as well. ITC, we were discussing that ahead of the earnings, that stock is in focus. You also have Emami and Dabur that reported numbers. Any top recommendations within FMCG?
Yeah, so Emami Limited has been trading very strong, and today it is up by 1%. So overall trend has been very favorable. ITC cannot comment before the result because many of the times we've seen that chart gets reversed after the result. So as of now, it is into consolidation. Only thing we can share with the ITC is the 484 is a very strong support that needs to be tracked. If ITC is managing to hold above this level, then the trend will definitely continue on the upside. So 484 is the short-term support, and Emami Limited, as I said, it is quite strong on the chart and looks very strong. So in the mid-cap FMCG space, I like Emami Limited for the short to medium term.
As well as Kunal for joining in with us today, but we will start winding down this edition of closing trades, and Nifty seems like we'll be closing at the 25,000 mark, just at that point, so we'll wait out for it to settle. As of now, holding on to the 25,000 will be for the first time that will be Nifty. Will be closing around that level. Sensex 81,850 levels is what we are watching out for. Almost, yes, near the day's our highest point is 82,129. So slight bit of that point, but Sensex also closing with gains of 0.1%. Mid and small cap today did manage to recover from the day's lowest point, and around, quite of a subduedness that we are seeing from the mid and small cap underperformance clearly coming in from the broader markets today. Advanced decline ratio, that's in the favor of decline versus an advance that we are looking at today. So yes, keeping an eye on that. Sector-wise, what we're seeing today doing well is the Nifty energy space. That's surely buzzing away in trade. We had Reliance, which is managing to hold on to gains of almost 0.8% in trade. Let's pull that up. Nadia Energy Solutions, that's the one buzzing with gains of 11%. Power Grid, Coal India after its numbers. Adani Green, Tata Power among the other names, as well as ONGC, managing to hold on to very strong gains. A lot of companies that we are focusing on coming in from the PSU Bank side as well, because that's something that is not managing to hold on to gains today. So PSU banks, we're seeing a fall coming in for Indian Bank, Canara Bank, SBI, all of them down almost 1% in trade. So let's watch out for that. And in the Nifty 50 that we should be keeping an eye out on today, in terms of the top gainers, obviously Power Grid was among the top names there, but losers we did have M&M, Hero Moto, Tata Steel, all of them also in focus and actually down and out, because on the flip side, we're seeing some pressure on these names today along with Britannia. But yes, that's how we'll be closing the day. Let's pull up the Nifty once more, 25,000. Seems like that's the mark. The Nifty will be closing at 25,004 is what the Nifty will close at today.